All right, welcome to today's Explainer. We're diving straight into a massive, frankly defining moment for one of the world's most enduring tech giants. We are going to unpack exactly how IBM stumbled in the second quarter of 2026, the specific market forces that totally caught them off guard, and the massive, multi-billion-dollar bets they're placing right now to completely pivot and recover their footing. So, if you love understanding the mechanics behind major market shifts, you are absolutely in the right place. Let's get into it.
25%. Just let that sink in for a second. That is the massive stock plunge IBM experienced, sending their shares tumbling all the way down to a low of $215.67. I mean, in the world of mega-cap tech stocks, a drop of this magnitude in a single day is literally an earthquake. It immediately raised red flags across the entire software and IT services universe, leaving analysts and investors completely scrambling for answers.
Okay, let's dive into this. Section 1. A historic stock crash. To really put this into perspective, you have to go all the way back to Black Monday in October of 1987 to see a single-day crash like this for IBM. So what was the trigger? Well, Wall Street had modeled a top-line revenue of $17.86 billion, but IBM reported actual revenue of $17.2 billion. And similarly, expected earnings per share were set at $3.01, but they came in at $2.93. Now, you might be thinking, to the untrained eye, a miss of roughly $600 million in revenue might just look like a rounding error for a giant corporation, right? But in the tech world, missing these specific targets causes immediate shockwaves. It signals to investors that the underlying growth engines might actually be stalling out.
Section 2. Why did IBM falter?
So, why the stumble? Well, we don't even have to rely on rumors or anonymous insiders here. We have an unusually transparent letter sent directly to investors by IBM CEO Arvind Krishna. He stated outright, and I quote, "We did not adapt and move quickly enough, and numerous large deals failed to close on the timelines we expected, driving the majority of our shortfall. These are not excuses, but they are realities." Wow. It is incredibly rare to see a chief executive speak this candidly during a crisis, openly admitting the company essentially failed to execute in a changing environment.
Section 3. The hardware CapEx shift. Now, what's really interesting about this is exactly what caused those deals to fall through.
Before we go further, just to make sure we're all on the exact same page, CapEx, or capital expenditure, is simply the funds a company uses to acquire, upgrade, and maintain physical assets, things like technology, infrastructure, and equipment. And that is exactly where the ground shifted under IBM's feet.
The core reason behind those failed deals was a sudden, violent pivot in how clients were spending their money. In the final weeks of June, enterprise clients entirely reprioritized their CapEx budgets practically overnight. Clients unexpectedly delayed software and services deals and instead initiated outright panic buying of servers, storage, and memory. They were hoarding hardware almost like it was 2020 all over again. Why? Because they were desperately trying to secure supply-constrained infrastructure ahead of expected price increases and hardware component inflation. So this massive buying panic completely starved the budgets that were originally earmarked for IBM's software stack.
But budget shifts weren't the only distraction. Actually, scratch that. It was a full-blown panic. Clients were navigating a massive, rapidly evolving cybersecurity crisis triggered by a brand new release, Anthropic's Mythos model. This is an AI model reportedly so powerful it possesses the capability to find vulnerabilities and hack major software systems. The sudden emergence of this threat forced enterprise clients to drop absolutely everything and pivot entirely to shoring up their cybersecurity defenses, which just further stalled out IBM's pending deals.
But you know, this perfectly illustrates the duality of IBM's current situation, because despite that historic stock crash, the underlying business engines are actually still firing on all cylinders. Check this out. Red Hat saw sequential revenue growth of 11%. And because of that hardware panic buying we just talked about, IBM's distributed infrastructure revenue shot up 37%. That's the best in their reported history, leaving them with a $500 million backlog. Plus, their generative AI book of business has now officially surpassed $12.5 billion.
Section 4. AI, Openness, and Accountability.
As IBM navigates away from this Q2 stumble, they are heavily leaning into an aggressive strategic pivot. They're positioning themselves not just as a vendor, but as a trusted guardian in the rapidly evolving AI space. Arvind Krishna has been very vocal about this recently, stating, AI developers should not be allowed to escape accountability by relying on broad legal protections similar to those provided to internet and social media companies. IBM is clearly pushing for a regulatory framework that ensures transparency and holds developers ethically and legally responsible for what they build.
So, the crucial point is they are backing up that talk with serious capital.
$5 billion. Following the panic caused by the Anthropic Mythos model, IBM and Red Hat poured this massive commitment into a new initiative called Lightwell. They mobilized the global force of more than 20,000 engineers to create a trusted enterprise clearinghouse specifically designed to address vulnerabilities in open-source AI software.
And that $5 billion bet is already securing massive institutional trust. Just look at the early adopters for Lightwell. We're talking Bank of America, Citi, Goldman Sachs, JP Morgan Chase, MasterCard, and Visa. Getting this level of buy-in from the world's absolute top financial institutions is a massive signal to the rest of the market. It proves for sure that IBM's strategy to provide a governed, secure AI layer is already resonating. And by the way, general availability for Lightwell officially began on July 8th.
Internally, AI is also completely reshaping IBM's workforce. During the Think 2026 AMA, Krishna revealed they are actually tripling entry-level hiring this year. Tripling it. Why? Because of AI productivity tools. He noted that AI enables a first-year employee to perform like someone with 5 years of experience. They are aggressively shifting away from clerical roles and leaning heavily into engineering and sales, basically using AI as a massive productivity engine to fuel their growth.
Section 5. The Quantum Computing Bet.
Now, while AI dominates the software conversation right now, we absolutely have to look at the next frontier of hardware. If you want to know where IBM's long-term horizon lies, this is it. According to Krishna, quantum computing is no longer decades away, it is upon us. He asserts that quantum has fundamentally shifted from a theoretical science problem into a practical engineering problem. They're already seeing clear near-term use cases, particularly in complex molecular modeling for chemistry and biology, and simulating real-world physics that classical computers simply cannot handle.
Let's see how this builds, because IBM is moving aggressively to dominate this roadmap. In 2026, they announced Andorran, the world's first pure-play quantum wafer foundry, backed by a $1 billion CHIPS incentive and $1 billion in IBM cash. Between 2026 and 2031, they are committing an additional $10 billion to quantum R&D and manufacturing. And all of this culminates in a massive, massive goal for 2029, delivering the first large-scale, fault-tolerant quantum computer.
Which leads us with this final, really critical question to ponder. Will IBM's massive $5 billion pivot into secure AI with Lightwell, alongside their $10 billion bet on quantum computing, be enough to reclaim its tech crown? Or is this sudden market shift toward basic hardware capex a permanent threat to their core software business? Thank you so much for joining me on this explainer today. Keep this question in mind as we watch exactly how this legacy tech giant navigates the incredibly turbulent years ahead. Catch you next time.